today we are looking at the petty cash book. Remember, we talked about expenses that are minor. We all talked about expenses that are major, and I said that major expense and minor expense depends on the organization. However, for the purpose of this study, we shall be looking at what the book used for recording minor expenses. Now, the petty cash book, it's a type of cash book used for recording minor expenses. The essence of the petty cash book is to free the main cash book from frequently occurring minor or small expenses. What I am trying to say is the petty cash book is usually operated so as to avoid loading the main cash book with small expenses. There are some expenses in organization that occur frequently and are small or minor in nature. Instead of bombarding the main cash book with such minor expenses, we will usually record them in the petty cash book. Now, there are terms frequently used in preparing the petty cash book. The first term there is the petty cashier. The petty cashier is the officer or the individual or the person that handles the petty cash book for the organization. Any individual or any person in charge of handling the petty cash book is referred to as the petty cashier. The next one there is the float. The float is the amount given to the petty cashier so as to enable the payment for what? Petty expenses. What am I trying to say? This also varies from organization to organization, but just understand that as a petty cashier, there's an amount of money that will be given to you so as to meet up with what? Petty expenses. That amount of money is called what? Float. For organization A, it might be 100,000. For organization B, it might be what? 200,000. Even for some organization, it might be what? 1 million. But understand that amount that is given to the petty cashier to be able to what? Pay for petty expenses is called float. The next one is called reimbursement. Now, in a simple term, reimbursement simply means paying back the petty cashier the amount spent out of the what? Float. For instance, if the petty cashier has given a float of 100,000 and at the end of the month the petty cashier spent 80,000, remaining 20,000 with him or her, the petty cashier will be reimbursed how much? 80,000, so as to take the petty cashier back to the what? Original what? Float of how much? 100,000. The next one is the analysis of what? Expenses. This simply describes the expense heads or the list of expenses that the petty cashier spends money on for a particular period. For instance, it is possible that in the month of, say, January or in the month of February, the petty cashier spent money on maybe cleaning, transport, postage, wastage, disposal, and other minor expenses. If there are like 5 in number at the end of the month, those 5 items are referred to as what? The analysis of what? Expenses. In a simple term, the analysis of expenses simply means what? The list of expenses that what? The petty cashier spends money on in a particular what? Period. The next one there is called the petty cash voucher. The petty cash voucher is a source document that backs up what? Petty expenses. Before the petty cashier pays a particular what? Expense, he or she must have the petty voucher filled accordingly. The petty voucher will show the date of the expenses, the person that the money is paid to, and the purpose of what? Of the spend. So basically, the petty cash voucher gives information about a particular what? Spend. Now, how do we prepare the petty cash book? There's really no difficulty in preparing the petty cash book. Remember, every transaction has a date. Every transaction has description. The only thing we are adding here is the float received against what? The analysis of expense, or the list of what? Expense. And because there's always what? A petty cash voucher normally filled, you also put the number of the petty cash voucher. In a simple form, or in summary, we prepare the petty cash book showing the date of the transaction, the float received for the period, the description or the item of payment, the PCV number, and the analysis of what? Expenses. Okay, now this is an illustration. These are the petty expense items, and this is the petty cash book for the month. The question says, Kwame, a wholesaler, is involved in the distribution of flour and sugar. For the month of January 2020, his petty cashier carried out the following transaction, but was unable to draw up a petty cash book. He has approached to prepare the petty cash book for him. Now, here are the questions. 1st of January, float given to the petty cashier, 50,000. Now, the following petty expense were paid for by the petty cashier with the PCVs serially numbered. So we can just conclude that the PCV is serial number from 2nd January. You can have PCV 1, PCV 2, PCV 3, 4, 5, 6, 7, 8, 9, 10, like that, based on the information given that is serial number. In some questions, they will give you the PCV number. Just pick it and then fill it there. But now, how do we now prepare the petty cash book? Look at it here. We have who owns the business? Kwame owns the business. We have petty cash book for the month of what? January 2020. This is the dates of the transaction. This is the receipt, the amount given to the petty cashier. This is the description. This is the PCV number. We have total, and then we have analysis of what? Expenses. So how do you pick the analysis of what? Of expenses. The analysis of expenses is picked from the question. You come in here, you look at the question. The first one you have here, you have cleaning. So you pick cleaning. You look at the what do you have? You have stationery. Pick stationery. What else do you have? You have transportation. Pick transportation. What else do you have? You have repairs. Pick repairs. You have what again? You have stationery here. That is already there. Or you have Mr. Dennis. Mr. Dennis is the ledger here. So we use ledger for individual names. Then the next one here, we have stationery is already there. Transport is already there. Cleaning is already there. Stationery is already there. Mr. Akman, that's the ledger, is already there. Transportation is already there. Cleaning is already there. Transport is there already. Cleaning, stationery, transport, and what? Cleaning. So basically, we have been able to pick 5 lists of what? Expenses from this question. And that is what is forming our what? Analysis of what? Expense. You can see cleaning, stationery, transport, repairs, and what? Ledger. So I'll go again. The petty cash book will show what? The dates, the receipt, description, PCV number, total here, and then we have the analysis of what? Expense. The analysis of expense shows the list of expense that what? Money or cash was spent on. That is picked from the what? Question. So now that we have the headings here, we can begin. On the 1st of January, they say float given to the petty cashier. So that is 1st January here. We have received how much? 50 naira, and that is what? The opening float under the description. Okay? So, and then the next one here says 2nd of what? January, cleaning. We have January 2nd here, cleaning. They said the PCV is serially numbered. So that's PCV 1. How much is it? 4,000. That's what you have here. And then under the analysis of expenses, you put it under what? cleaning, because it is spent on what? On cleaning. The next one here, January 6th, stationery. How much is it? 15. So date, January 6th. Description is what? Stationery. PCV number will be what? 2. Total here is 1,005. That's the amount. But under what analysis now? Stationery, you have 1,500. The next one here is on the 8th of January, we have transportation. So we have 8th January here, transportation. PCV number 3, amount is what? 3,005. Then it goes under what? Transport here, 3,005. The next one here, we have 12th of January. That is Mr. Dennis. So we have 12th January here. How much is that, Mr. Dennis? How much is that? That is 1,800. So 1,800, that will be under what? Ledger. I hope we are following. So what am I saying here is just for us to pick the date of the transaction, pick the description of transaction, pick the PCV number, the amount, and put it under the particular what? Expense head. So now we have done 2nd January, which is cleaning, 6th January, which is stationery, 8th January, which is transportation, 10th January, which is what? Repairs, and now we have 12th January, which is Mr. what? Dennis, and we've recorded it under what? Ledger there. So the next one there we have 13th January, that is stationery. How much is that? 700. So we have 13th January stationery. You put the PCV number, my serial number there, and then we have it on that total here, 700. Okay, and then that is under where now? Under stationery, 700. The next one is 14th of January, which is what? Transportation. So we have it there, 14th of January. That is PCV number 7. Amount is how much? 900, and that goes under transportation here, 900. The next one is 15th of January, which is cleaning. So we have 15th January cleaning, PCV number 8. Total how much? 800. Under cleaning, 800. The next one is 16th January. We have stationery. That is 16th here, stationery. How much is that? 1,200. So it's PCV number 9, 1, 2. Then straight on that stationery here, we have 1,200. The next one, we have 17th of January, we have Mr. Akpan. Money was paid to Mr. Akpan. Remember, individual names, we take it to ledger. So we have PCV number 11. Mr. Akpan here. Mr. Akpan here is 17th of January, and that's 6,500. So that's PCV number 10, 6,005, under ledger 6,005. On the 19th of January, we have transportation, and that is 4,005. PCV number 11. Total here is 4,005. Under transport, 4,005. So the next one is 20th of January. We have cleaning. Cleaning there is 300 naira. So we have PCV number 12. 300 naira in the total column, 300 naira under what? Cleaning. Then we have 21st of January. We have transportation. That will be PCV number 13. 500 naira in total column, 500 naira in what? Transport column. On the 22nd, we have cleaning as well. That's PCV number 14. We have 3,005. Cleaning is 3,005. On the 23rd is still cleaning, and that's PCV number 15. Total 200. Under cleaning there, 200. And then on the 24th, we have stationery. That's PCV number 16. So we have total column there 400, then go straight to stationery 400. On the 25th we have transportation, PCV number 17, that's 250. Then go straight on that transport 250 here. Now on the 26th, which is the last time item there, cleaning is 1,200. That's the question here. On the 26th, cleaning 1,200. So in the preparation, we have 26th here under the date. Description here, cleaning. The PCV number is 18. Total here is 12, which is the amount. Under cleaning, we have 12. Now that we have recorded all the transaction, we must now establish the total amount spent by the petty cashier. So if we add up, total amount spent under ledger here is 18 plus 65, that's 8,300. Total amount spent under transportation here we have 35, 900, 45, 500, 250, that's 9,650. Total amount spent under repairs is 25, you have 25 here. Total amount spent under stationery we have 15, 700, 12, 400, that's 3,800. Total amount spent under cleaning 400, 800, 300, 350, 3,500, 200 and 12, that's 10,000. So amount spent in total is addition of all the expense, which is 34,250 naira. So it means that out of the float of 50,000, the petty cashier spent 34,250. So we have to refund back to the petty cashier how much? 34,250. That is the reimbursement. You can be asking in examination condition, what is the amount to be reimbursed to the petty cashier? That will be 34,250. They can ask you what is the float given to petty cashier. That's 50,000. They can ask you what the total amount spent on cleaning. That's all the amount on that cleaning here. That's 10,000. You can be asked what total amount spent on stationery. That's total amount on that stationery. That's 3,800. You can be asked what total amount spent on repairs. Go to repairs column there. You have 2,500. So let's balance up here. So now the total amount spent is what? 34,250. That is what will be given to the petty cashier. So that is what you have here. 31st January. Now, as I said earlier, the total amount spent by the petty cashier is 34,250, and that is what will be the reimbursement to be paid back to the petty cashier. So that's what we are going to balance it. At the 1st of January, we have 34,250 here, which is this total here. This is the balance reimbursement. So that the total column here will be equal to total column here. So we have 34,250 here. It's brought here under the receipt code 34,250. So we have 34,250 plus 50,000. That gives us 84,250. 50,000 is brought under the total column here. We have 50,000 plus 34,250. That gives us 84,250. Hence, taking the petty cashier back towards 50,000, that is the float that is always what received. That is the petty cash book. If you have questions, you can reach me on 08136506356 or send me an email, jeremiah.dosu@gmail.com. I encourage you to solve questions. If you have issues, you can also drop questions in the comment section. I'll be there to give you answers in form of what? A reply. Thank you.